Hey, this is Neil's Han Dynasty. Please like, share, and subscribe. Buy some silver, some platinum, and some crystallized osmium. Be kind, helpful, and grateful. Don't listen to me. Everything I say is to be taken with bullshit. This is for fun, not for health or profit. Now I got all of the disclaimers out of the way. Let's go to the real story. As this title of the show says, historical volatility. This is what historical volatility looks like when you go to an actual bull run of precious metals. Gold just fell 4.5%, $200. Silver just fell almost 9%. Platinum just dropped 13%. Palladium just dropped 16%. Over the next day or two, after this downward turn changes, you're going to see even bigger numbers going upward. You'll see gold going up 8 to 9, 10%. You'll see silver going up 16, 17, 18%. You'll see platinum go up 18, 19, 20, 21%. You'll see palladium run up 20, 21, 22%. Throughout the years that I've been studying these bull markets, these bull runs, listening to these YouTubers and experts and whatnot, one thing they said early as in my learning is that higher highs, higher lows, extreme volatility. What I took from that was exactly what we're seeing right now. Higher highs, extreme volatility on the price swing going down, but it's going to be even more extreme on this price swing going back up. They said volatility, platinum is the most volatile of the precious metals. Okay, if you say so. Until today, I haven't seen that. Today is the first time I've seen serious volatility in the platinum markets. I mean, we're talking down 13.5% and palladium down 16, almost 16.5%. That's some serious volatility. Silver now almost down 9%. Now we're getting into volatility. So what you got to fall back on is don't freak out, but look at the statistical past and averages, and you'll find out that this is what a bull run looks like right here. Extremely severe swings, both downwardly and upwardly. The difference being the severe down is not going to be as bad as the severe up that follows it. And that's how you get the upward action. It's like a regular chart on steroids. Instead of minor moves up and down on a chart, there's going to be major moves up and down on a chart. You look at rhodium, it's up 5%, $400. It's the only one up. This is volatility. This means we are getting into the serious sprint for silver and platinum over gold, because everyone was talking about, not everyone, but a lot of people were like, oh, silver's supposed to sprint, silver and platinum were supposed to sprint after gold runs. Gold's been running for a year or two. Well, now it's time for platinum and silver to sprint. They sprinted up. Now we're getting into volatility in that sprint. You can see it right here, 13, 14% down for platinum, 9% down for silver. But by probably Friday, silver overall will probably be closer to $85, and platinum will probably be up to $2,700. So when you're seeing this volatility, a lot of people are going to freak out. But you just got to go back to the old standards. What's up, Pete? The old standards of the way it always has been, and that's volatility. A bull runs mean volatilities. You're in an upward, hey, what's up, Raspberry? You're in an upward momentum in a volatile market in a bull run. Hey, Gerald, that means you're going to have extreme highs. I've said this on other videos. Silver go up 8, down 4, up 10, down 6. Those are extreme numbers, but the upward volume of the price keeps going up, even though the downward momentum also goes down. It's never as far down as it is up, even though the price swing is severe. We're seeing this in silver, since you guys pay attention to silver. It's almost a $10 drop. If we go to, let me get to a silver chart, see if I can't find a silver chart. Okay, I'm going to go ahead and share this screen to show you guys what I'm talking about. Let me get in here and share screen. Stop sharing that one. Share screen. Tell you what I'm talking about when it comes to price volatility. Okay, let me go with nope, that's too much. Can't see it there. Let's go with 4 hours. Okay, yeah, you can see this here now. Okay, from what day is this? The 26th, it was at 76 bucks. It ran up on the 20, how's that, the 26th? Wow, hold on, let me go back here another day. Okay, well, all on the same day, the 25th, it was about 74. It runs up all the way up to 84, a $10 upward move. Holy cow. $10 in, what is this? A couple of hours, a day or two? December 25th. Yeah. No, okay, wait, 25th. Okay, here we go. I'm looking at the wrong thing. Yeah, okay, the 26th is when it was around 75. 28th, it hit 85. So it took it 2 days to go $10. Now, from that, what was it, 85, 83, 84, now it's down to 72. A $13 swing from the 29th in 1 day. A $13 swing in 1 day. Well, heck, what's that mean? Volatility in the PM market. We've been told about this. David Morgan's talked about it. Ninja's talked about it. Andy Shedman's talked about it. Everyone's talked about it. And yet, people are freaking out like it's something new. It's not something new. It's a good thing. It just fell $13 in a 24-hour time period. Check this out. I'm going to make a prediction. In a 48-hour time period, it'll jump up probably $18 to $20. We're getting into volatility upward. You want to see this thing go to 3 numbers? You want to see it go 200, 300 bucks an ounce? This is how you get there. So it's actually not something to be upset or freaked out over. Get excited because we're fixing to make these moves that are going to take silver into the triple digits. Because if you got a $13+ drop in a 24-hour time period, it's going to go up higher than it fell if we're in a bull run. Silver and platinum, they say sprint. Well, what's a sprint in a bull run? Dramatic price action. Well, what is dramatic price action? Well, depending on the price at the start, if it started out at 75, went up to 85 and dropped down to 71, well, that's exactly what I'm talking about. And that's exactly what's happened. So we're on course with what's supposed to happen. You don't need to be freaking out. Oh my God, this is unprecedented. No, it is not. I have anticipated this. This is how you tell when silver is going to sprint. And in that sprint, it's not just going to go from 71 up to $400 and not have any downward action. And it's not going to do that in 13 days. It can, but it's got to have volatility. It's got to go up 10, down 13, up 20, down 22, up 35, down 20. That's how we're getting to $100, $200, $300 silver. So these are to be anticipated as these people, and I don't agree with dollar cost averaging. I think that's a poor way to do things, but irrelevant of my opinion. For those people who are, and there's a large number of them, that think dollar cost averaging is a good thing. Well, I'd start looking at rebuying silver. You know, if it, I mean, shit, it's $14 cheaper than it was yesterday. That is, oh, I don't know, 13% price change, 14, 15% price change. So if you could buy gas today for 14 or 15% cheaper than you could yesterday, how much better off would you be? I guess that would be dollar cost averaging. Now, if it keeps falling and goes down a little further, which I don't believe it will, that'd be a bad deal. And that's one reason why I don't like dollar cost averaging, because you don't know when shit's going to happen. And this right here chart, you can't determine a bottom, a floor. We're in uncharted territory. So all these chart readers that look at things go, oh, well, look here and go back. Okay, well, there's nothing there. Well, look here and go back. Well, no, that's 4 hours. You can't base a bottom on a 4 hours. Well, go back here. How about this? No, you can't base bottom off of that because it's only, hold on, let's see, December 1st. 3 days. Okay, yeah, maybe you could get a bottom off this. $56, $56.50. And even that's not really a good base to draw off of on these charts. I mean, look at that chart. It's just real hard. And if you do the Fibonacci thing, all this other stuff, both of them from the last high, last low, shoot up, it's got the trajectory of going parabolic. And kind of sort of is. So upward and downward action of $15 in a day, not a problem. Not a problem at all. I anticipate these moves. But if you were to pick a bottom here, a glass bottom, I'd say 71.89 looks like a glass bottom. But you really can't tell because there's no green candles in here, only red candles across that line. So it's real hard to do things when you're in a bull run with precious metals. So all you got to do is look to the volatility, go to the historic norms. Historic norms say historical volatility. Again, if you want to look at platinum, let me remove this. And we will go back to the platinum and silver price. And here we're looking. Platinum is down $354. If you want to freak out, that's something to freak out over. Gold is down 200. That's not even a freak out. Platinum, the one that's supposed to be the most volatile in price action, is down 14.5%. Now I'm seeing the volatility I've always heard about in platinum that I've never seen. Today's the first day I've seen it in my entire, adult life of looking at precious metals, which goes back to 2008. When this is the first time I'm seeing volatility like this in the precious metals market, specifically platinum, for which everyone always told me is the most volatile price action. And I was like, I don't see it. I've said it on live stream several times. I don't see it. I don't see it. I don't see the volatility. Today is the first day in my adult life that I've seen volatility in the platinum market. So now I go back to my books and I say, okay, volatility in the platinum market during the bull run. What do we look for? What's going to happen? What's projected to happen? Well, when you get volatility showing up like this, again, goes down 15%, it'll go up 20%, 25%, then it'll drop down 15, 20%, then it'll go up 25 or 30%. That's volatility, but it's an upward direction and it's dramatic price swings. Another reason why platinum dealers or people, coin shops don't like buying platinum is because historically in a bull run, this is the end game of platinum and silver when they go to sprint. So you're going to have volatile down, but even more volatile up action. It's going to be significantly more visible in the platinum market than in the silver market. And that's how platinum will end up just through this run, probably cost more than gold at the end of this bull run because of these price swings. Platinum just lost 10% of gold's price. 10% of gold's price. So when it goes back up, it's going to get 15 to 20% of gold's price back, or maybe $600-800 upward swing. That's going to throw it up to $2,600-2,700. 2-3 weeks of that, and you're looking at a $3,000 to $4,000 to $5,000 platinum. You're looking at a $200 silver. This is what you need to look for during the bull runs in the precious metals market. Just going off of what I've learned. Yeah, that's like, it's down 15%. This is the first time I've seen platinum make a 15% move and downward. And that's cool. That's actually really, 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 really good. Because what that does is that is a buying opportunity. Because if you were to buy it a day and it go up 20% in the next couple of days, which it'll definitely go back up. My God, you will be making some serious advantage in your asset allocation if you were to buy platinum today. And silver, but don't touch gold. Stay away from gold. Everyone's being played on the gold market. Everyone says, and this is the foolish thing too, gold and silver are money. They always have been. And that has always been true. But you know what they don't always tell you? Copper's always been money also. But it's not a precious metal. But if I go back and I look through history and I see things that different civilizations valued, copper is always in at the lower end, the peasant level of monetary systems. And you know what? The peasant level of monetary systems was the largest denomination of numerical significance in any population, because your poor class is always the largest. So in reality, copper is the most important monetary metal out there. What's up, Chad? Historically, but not one precious metal person will tell you that copper is money, even though they'll tell you, save your copper pennies before 1982. They got real copper in them. Why? It's not money. Oh, but it's going to make you money. Well, if it's going to make you money, buy platinum. Oh, well, platinum's not money. What the fuck, you psychotic freak? You just double negative yourself in one conversation. Buy copper, but don't buy platinum for the exact same reasons. Buy copper because it's in the money, and it's going to be 1 penny of money is three pennies of copper, but it's not a monetary metal. Never in history has it been a monetary metal, but it is a monetary metal. You see the double negatives going on in what they're trying to sell us to confuse us, so you don't see clearly the path forward to make money in precious metals. It's like double Dutch on your language. And they get you, try and confuse you on this stuff so you can't see clearly. Oh, you can definitely buy both. And diversity is definitely a thing. But don't be hornswoggled by these YouTube people that try and tell you that platinum and copper are not money. They are money. Bottom line. And if they aren't money, you still can make money. You can make more money off of platinum than you can copper. But just like with houses aren't money. But you can make more money off of a house than you can with gold. You know? So when you're looking at the confusing language of multiple overlaying principles of economics, they do that intentionally to confuse you. And it's real hard to understand, to keep clear. Actually, it's not. It's real easy once you figure it out, but figuring it out is kind of hard. But it's real easy after that. So basically, whoever tells you only buy gold and silver, they're idiots. They've got blinders on. If someone only tells you only buy Bitcoin and XRP, they're idiots. They've got blinders on. What you need to do is you need to take blinders off and look at every asset class. You can make money at pork belly futures. So if you can make money selling pork belly futures, you can make money on corn, you can make money on land, you can make money on houses, you can make money on Bitcoin, you can make money on crypto, you can make money on gold and silver, you can make money on stocks, you can make money on water, you can make money on cow poop. See, now that's making money. That's not precious metals only making money, but you can make more money than precious metals. And I'll give you another example here. Now let me remove stage here and go to share screen, and I'll show you about money. You want to know about money? It has nothing to do with gold. It has nothing to do with silver. It has to do with money. It has to do with platinum, and it has to do with paper platinum. It has to do with platinum miner. And look at this chart. I was telling people to buy this shit when it was 3.5 cents. Look at it. And it's down. And it's double from the time I told people to buy in on it. And that was less than a year. You know, it's going to quadruple in the next couple months. It's going to far do better than gold, silver, not platinum, because it's actually a platinum miner as well. As that's why it's going up, because platinum price is going up. But anyhow, stocks. You can do good on stocks. You can do good on crypto. You can do good on all asset classes if you want to make money. If you only want to make money in a certain asset class and try and sell it as the only thing out there, kind of sort of you're an idiot. Because for years and years and decades and millenniums, people have been making money off of whatever people want to make money off of. And if they can't make money off of that, they create something new and make money off of that. That's how our economies actually work. That's why at one point in time, we use seashells as money. At one point in time, we use glass beads as money because technological advancements came along and some French guy figured out how he could blow glass and make these small little beads. And he was the only one who had the technology. So due to the economic reality of rarity and price evaluation of the rarity of things, he found out that he could make these little glass beads money. And he started selling them and they became money. They're called Phoenician beads. Just because of a technological advance, just like technological advance into a cryptocurrency, and we're going to get cryptocurrency money. It's not going to last forever. It's going to last as long as the Phoenician beads, 20, 25 years, and then we'll evolve into something else. That's how economies work. They're always growing and changing. If you understand that, you don't get locked down in one thing. And what you do is you make money in all things as they come around to have money made off of them. Because all things come around to make money off of. Crypto, stocks, precious metals, corn, pork belly futures, water, oil, whatever precious metals, they're all you can make money off all of them. So the bottom line isn't that who can get the most, it's who can keep the most. And you keep the most by learning the system and not losing it after you get it. Exactly. And then those are the end game. You can make the money, but the question is, what are you going to do with it? Making money actually is easy. For 3.5 years, I've been given good advice on different stocks and cryptos, and of course, precious metals on which ones to buy, like platinum and crystallized osmium. Oh, by the way, they're looking at crystallized osmium. Everyone wants to know, what's the use case of crystallized osmium? New technology that hasn't been invented yet. Well, that's stupid. Okay, don't look at quantum computers and the possible use of crystallized osmium and the price of crystallized osmium going up, 1,000x because of a new technological use that hasn't been made yet. That's why I don't like charts. Charts are a past indicator. People who make billions of dollars look in the future and say, on a chart, that's going to be 1,000x. Let's invest in it. And then when they come up with a chart, then you find out if it's 1,000x or only 500x. But you got in before the chart, so you're making money before everyone else. That's how you make money. So yeah, it's just a different way of looking at money, how to make it, and what is money. Anything can be money. If I mow the person's lawn and get a lunch out of it, well, at that point in time, lunch is money. What is your definition and time frame for the word money? What are your parameters that you're going to put on it? So that way you can feel good about calling that money, even though other people do transactions and get rewarded for those transactions. That's the same as money, but they don't use money. Like I said, I go mow a friend's lawn, they give me lunch. So is lunch money now? No, but you do need lunch money when you go to school. Seeing how the words can confuse your economic principles? That's how easy it is to get screwed up. So stay on course. Never leave keep your eye on the prize. Platinum, silver, crystallized osmium. If you like that dollar cost averaging thing, you're going to have lots of opportunities on an upward momentum of a downward case, just as what's happening right now with platinum on a horribly, awesomely beautiful downward scale of about 15%, which is, in my view, awesome. 14.75% down, $357 within a 24-hour time period. Yeah. And silver's down like $9. Actually, it was up to 85. So actually, silver's down $14 from its new all-time high, which is like $85, $83 it says here, and it's now 71. So it's right, almost $84. So that's $31.50. So looking at 50, 12, $12.50 lower in 24 hours from its high. And platinum is about $400 off of its high in just a 24-hour time period. So volatile markets means that this is harsh waters. Harsh waters means you can make money. If you do a lot of studying on stocks, cryptos, and all this stuff, bull markets, bear markets, you will come to the determination after 2 to 3 years of your studying that there is more money to be made in a bear market than there is a bull market. And, one good time to make money in a bull market is when you have runs. And if you want runs, you look to the precious metals. And of the precious metals, you don't look at gold, you look at silver and platinum, because gold runs, and that's good. There's money to be made in a run. But silver and platinum sprints. And that means they didn't do better than gold. And if you look at the volatility, as I just stated in this chart right here, platinum almost 15% down, 16.5% for palladium, almost 10% for silver. Gold only down 5%. Gold's not volatile. So if it's not volatile, you don't have a chance of making as much money on it. Now you need to make sure you know how to play the game. If you don't know how to play the game, you're going to lose money. Quitillin. Hello, what's up? Sorry, I didn't see you earlier. I was running my mouth. Be nice. No talking about people on my show. If you don't care for someone, keep it between you and them. I don't like my platform being used for people be disputing amongst each other. That's not what this platform is for. Hey, how's it going, Mo? But anyhow, yeah, we're starting to see volatility in the silver and the platinum markets. I suggest everyone keep a close eye and realize these are historic times in the precious metals market. You're not going to see another bull run after this one's over. Bull runs last about 800, 900 days, a little over 2 years, 3 years. We're in the third year, moving into the third year. So this year's going to be an awesome year. So at the end of this year, we're beginning of next year. By summer of 2027, the bull run will be over. We'll see what the final price is of platinum and silver and gold. And then we'll have to worry about a reevaluation. But having said that, that's all future shit and liable to change at any point in time. I hope you guys have a wonderful week. I wanted to keep this one short. It's historic, the drop in price for both silver and platinum. And I just wanted to get it out. That was one hell of a hit. Woo, that was one hell of a hit. But anyhow, I'm going to call this one. As you can see, look at the charts on your own. Platinum and silver are dramatically down. This is the beginning of the sprint. Upward momentum. It'll probably last, I don't know. Could last up to 6 months. That we see this kind of price action in silver and platinum before it's all over with. But we shall see. You guys have a great day. Be safe, be kind, be helpful, be grateful, be good to each other, and have a great rest of your week.